Yes.
Oh man. Where are you at, Nadia, right now?
Currently, I'm in Charleston, South Carolina for a
Oh,
tax conference.
South
Yes.
Carolina. Always working, getting ready.
It's a nice little city. Flew in today and it's nice. Palm trees on the sidewalk, which we don't see those in Texas.
We have a lot of those here in
I
California.
know you do. Yes.
Especially in Southern California. We have Celia saying hello, Mr. Lopez. Hello, everybody. Thank you, everybody. Let us know where you're tuning in from. Um, yeah, Washington, Sunnyside, Chicago, uh,
Minnesota. Hi,
Minnesota. Yeah,
Francisco. They're my neighbor.
yeah, LA. Yeah, a lot of Southern California, Florida, and we are connecting live as well. Um, we're live on Facebook, YouTube, and LinkedIn. Cool. So we're on the dot here. So we definitely want to keep mind of the allotted time that we have today. I have in the first segment, first of all, let me introduce myself and then I'll go in with the colleagues. My name is Vicente here at Latino Tax Pro, a sales manager. And we welcome everybody, whether you're joining us through Zoom, Facebook, YouTube, or LinkedIn. Today we are doing a second part of the Big Beautiful Bill. I know this was a backstage conversation. What do we call it? And it was referred by acronyms, but we're just going to call it as it is, a Big Beautiful Bill, unless anybody else wants to do it, the acronyms. But we're gonna just jump in right here. We're gonna have the questions be sent through the Q&A if you're here on the Zoom platform. If you're on the social media, any of the social media platforms, we're gonna try and answer those questions. But we have a lot of information, topics that we want to cover today, and we're gonna get to them as quickly and best and efficiently as possible. So, we're gonna start with Nejla. Do you mind introducing yourself to our friends and especially those that missed out on Latino Tax Fest? Seeing that you came out this first year. So, do you mind introducing yourself or reintroducing yourself to those that our audience out
Absolutely.
here?
Yes, absolutely. I'm Nejla Smith. I'm a CPA from Sioux Falls, South Dakota. I have a bilingual practice here and focus primarily on immigrant taxes and those tax situations that affect them. And like I said, we're 100% bilingual here, so everyone is very welcome and have started speaking in this last year. I'm very honored to join Carlos, Nadia, you Vince too, at Latino Tax Fest this last year and hope to be there this next year as well. Thanks for having me.
Thank you, Leslie. And for those that still don't know Nadia, Nadia, do you mind introducing yourself?
Yes, if we haven't met before, very good to meet you today. My name is Nadia Rodriguez. I'm a practicing CPA out of Dallas, Texas. Been in business for over 15 years, but I'm also a public speaker, love to share knowledge on tax. One of my favorite places to be in is every year at Latino Tax Fest, where I get to share the stage and spread the knowledge with everyone. I have been in practice for, like I said, over 15 years. My serving clients are those that are in small businesses and the individual clients as well. Thank you for having me here, and I'm excited to share some more OBBA knowledge because there's a lot going on. And I think bringing together this amazing panel, we can come together and spread the word.
Awesome. Thank you, Nadia. And last but not least, and then our panel discussion, Mr. Lopez, do you mind introducing yourself to our friends and audience?
Yeah, hi everyone. If you haven't heard of me before, I'm Carlos Lopez. I'm an enrolled agent and the founder and CEO of Latino Tax Pro and Lopez Tax Service. Um, our whole purpose and mission here is to share knowledge, share information, and to help all those who serve the Spanish-speaking taxpayer. It's a very underserved market, and we're here to make sure that everybody understands what the regulations are, what the rules are, and how to help others. Thank you.
Awesome. Thank you, Mr. Lopez, and everybody here in the panel. We're definitely excited to be going over a lot of information. Man, I don't know if we can jam pack it today or even do a dent
Might
in
need
this bill.
some more of these, Vince.
Yeah, yeah, definitely. I think we're gonna need to have a whole series of, of this
Yeah.
until the new updates come out. But today I know we have quite a few topics that we want to talk about. Um, do we want to start with you, Mr. Lopez, since we started with you? And what are the topics
Okay.
that, or one of the items that you want to cover today?
Yeah, as far as I'd like to talk a little bit about businesses and what we are facing. One of them is the bonus depreciation has been extended and for the federal. Now, one thing I want to make real clear to everybody, the big beautiful bill is a federal law. And so every state has their own, regulations and their own conformity issues. So remember what we're talking about today, and every time we mention the big beautiful bill or HR1, we're talking about federal law. So bonus depreciation, I know in our state it is not um, permitted. So I just want to make sure that it is a bit extended on the federal. A lot of the TCJA, the Tax Cuts and Jobs Act of 2017, have been extended. That was part of what the president wanted to do. A couple of new things that I'm going to briefly talk about will be one of them is tips. I get asked about tips every day and not just once or twice. So the way the tip act works is it's important to understand that the tips are is a deduction. It's not an exclusion of tips. So you need to include it in your taxable income, and then it's a deduction. Oh, another thing too, I want to also really emphasize, we're giving you what we have heard is going to happen. So everybody, please remember what we say today may not be true tomorrow. So we're telling you what we know as of today. So you can deduct up to $25,000 of reported tip income on your federal income tax, but it's only if it's normally tipped income. So if you're a bulldozer driver and you suddenly want your employer to pay you some tips, you're probably not going to get it. So it's what's normally tipped. I know I already had some tax preparers call me up and ask me, well, can I change $25,000 of my preparers commissions to tips? And I go, you probably can, but it won't be deducted, won't be deductible. So, so watch out for that.
Yes.
We
That's a great point, Mr. Lopez. Especially, it has to be a voluntary tip.
A voluntary,
Right.
good.
Voluntary. So it can't be, I don't know in California, but here in Texas, we do have restaurants, if we have a party of more than 6 people, we get charged an automatic 20% gratuity charge on our receipt. That is not a voluntary tip. So yes, employers are going to have to go in and try to sort out what a qualified tip is versus non-qualified. And yes, we thought about that too as preparers, hey, maybe clients do see some value to the extra that they're going to give us a tip, but SSTBs, our industry, were excluded. And so no matter, even if they gave us a tip, we don't qualify for that tip deduction, unfortunately.
Darn it.
Yes.
Yeah. So thank you for this, and everybody else watching here, especially in the Zoom platform. Some of you are starting to submit your questions in the Q&A. Please submit them here because if you put them in the chat itself, they get lost. So I guess as a follow-up question, Nadia, what is a volunteer tip?
Yes. So the voluntary tip is one that is determined by the payor, so the customer. Paying that. They're the ones, how we fill out our receipt at the end. If we do 10%, 15%, 20%, we are the ones who decide as a customer how much to tip. But if the amount is determined by the restaurant or determined by somebody else, then it's not voluntary. That is a mandatory non-qualified tip. It's still going to be taxable, just like voluntary and non-voluntary. But when it comes to the deduction of the $25,000, only voluntary tips is what is allowed the deduction of up to $25,000.
Awesome. Here's a good one. Does that include allocated tips?
It does include allocated tips.
Awesome. So on to our next topic. I know you do have a couple items as well, Nadia, that you want to talk about. Is there something specifically that you want to bring up to this audience?
Yeah, so you know this with this one big beautiful bill, a lot of the provisions became permanent, and which is great because it's the provisions that we've been used to with TCJA, but which is good, right? We don't like too much change. But what did come completely new were those four deductions, which is the one Mr. Lopez talked about, the tip income. And then we also have the overtime, qualified overtime pay. That's up to $12,500 per taxpayer that earns that qualified overtime pay. Um, Now, I don't know, Nejla and Mr. Lopez, have you listened about this 12,500 when it's qualified tip? It's really just the half. So if you talk about overtime, when we talk about overtime, it gets paid at 1.5 times of your hourly rate. So it's really just a portion that's the half. Example, if somebody gets paid usually $10 an hour for regular pay and they work overtime hours, it's paid at $15, right? A time and a half. It's really just that $5, just that extra above what they regularly get paid. That's overtime compensation.
It's
I
just like
think
when they're figuring out the workers' comp rate. It's only
mhm.
the half-time
Yes.
part that's subject to workers' comp. That's how they're doing the tip income as well.
So I
Yes.
think we're going to be looking out for our payroll processing companies to kind of give
Yes.
us a hand with that
Mhm.
and do some of that back end work so that when we as the people who are helping our clients do their payroll and putting those hours perhaps that then on the W-2 we're going to be seeing that amount of overtime, the amount of tips that are
Mhm.
qualified for this. And so really hoping those payroll companies come through on those things. And I'm thinking our restaurants that we have as clients, hopefully their systems that they're using
Mhm.
are allowing them to separate out those um, required gratuity compared to the gratuity
Mandatory.
that are
They're
uh,
required. Yeah.
yes.
Mandatory
Yes.
tips.
The bandit
Ouch.
where we have no choice with the large parties.
Mhm.
Yeah, so that's the thing, right? And I think the responsibility is not going to come on us to determine when we get a W-2 what is overtime, what is regular pay, because the law does say that the IRS has to come to us within 90 days, which the deadline is around October for them, to tell us how these W-2s are going to look, how the 1099 NECs are going to look, because Uber drivers, they also receive tips. And so the law does mandate that the tips have to be reported on a statement, which is the W-2, the 1099 NEC. Now, where? That's on the IRS's responsibility to figure out how and where on the W-2 and the 1099 is. So we're waiting on them to show us the box that's going to be extra, maybe a checkbox. We're not sure. So let's wait on them to tell us.
Yeah, and that's probably a question that it's in everybody's mind right now. Where would I be able to find that in the W-2? And then
Yeah,
who's gonna
we
keep
don't know
track of
yet.
all of
Mhm.
that?
Yeah, I've already been asked,
Yeah.
what box is that going to be on in the W-2? Well,
That was one of the first questions in this last webinar we did, and
Hmm.
we're like,
oh,
"Yep, we're still waiting for that guidance,"
Mhm.
but we're trying to keep
Yes.
everybody as updated as possible with the newest information and everything that's coming out. And as mentioned, this is what we have as of today, but maybe tomorrow something else might change. We don't know yet. So yeah,
Mhm.
these are all great points. And now with you, Nejla, is there something that you want to bring out, talk to the people about, something that they should be aware of? I mean, there's only 900 pages of this bill, right?
Well, the part that really hits near and dear to my heart, to my practice, to so many people that I know, it is the requirement for SSN, for a social security number, on many of these new provisions, and even ones that we counted on being active until the end of 2025. The most blazing one in my mind is the child tax credit requirement. So we thought that we would have this child tax credit for kids. Of course, they always have needed that social security number, but now the parents are going to be required, at least one parent in a married filing joint household will be required to have a social security number in order to take the child tax credit and or the additional child tax credit. And my biggest concern is that it's taking um, it is going to take effect for 2025. We are already
July
further
23rd.
closer. Yes, we're in
Yeah.
July 23rd. We are closer to 2026 than we are to January 1, 2025. And our clients have not withheld enough this year to cover for the tax that they are going to be charged, because their W-4 says they have 3 dependents under the age of 17 with social security numbers. So now their W-2 and their everyday paycheck, their weekly paycheck, is being discounted, thinking that they're going to have a $6,000 credit at the end of the year, two for each of those children. And now it's probably only going to be 500 each. So that's 4,500 different. And it's huge. I think that our clients are not prepared. We need to get this information out to them as soon as possible so they can make the decisions that they need to make with their W-4, with their employer, whatever, or estimated tax payment changes that they might have to make for the third and fourth quarters of this year. Uh, but I feel like this is the most important one. Of course, there are more requirements for social security numbers, just even with the tips that we were just speaking about, that tip deduction requires that social security number as well. Were you going to say something, Carlos?
Good point, Nash. Good.
Mm-hmm.
Yeah,
Yeah.
absolutely. Pretty much all of the four new
Yes.
um, deductions, and as well as that credit, all of those require a valid social security number.
Yeah.
And there are still some unknowns in that area. We don't know if someone is a tip earner, let's say a restaurant worker married to a person that has an ITIN, will they be able to take the tip deduction? It's unclear at this point. We're waiting on more guidance.
It
Yeah,
is the requirement of that social security number. And I think this is, if we think about TCJA, it got passed in December, right? And we didn't have too much time to react and to be proactive. And I think this that got passed in the middle of the year, we still have time, but time is flying. So this is a time to really, like you're saying, just get with our clients, start looking at that withholding, and start thinking about other tax planning tips that we can help them with to maybe compensate, especially if they're business owners, right? Do they have assets that now are allowed 100% bonus depreciation to make up for that difference of the lost credit? But at least that awareness so that they're prepared, because the worst thing is for them to find out that the day they have to do the return, and that's when we have to give the news. So just spreading the awareness over social media, over client letters, client emails, webinars like this, that we are spreading that education, and then our participants can take that information and spread it to their clients as well.
Absolutely,
Right.
that's going to be pivotal.
Yeah. The question that I've been getting recently is, how are we going to spread this information to our client base? And we do send out a quarterly newsletter, but I'm not sure how many of our clients even look at it and just don't throw it in their, you know,
Y-
junk folder or whatever. So
y-
we're going to have to start paying attention to that.
yeah, a lot of the things that you tend to come up even now within my own family members is, hey, I'm trying to fill out this W-4. Do you guys get also clients confused with how to fill this W-4?
Uh, that's
Everybody's confused. It's yes, it is. It's confusing. But yeah, one of the things like Nash was saying, if you're putting three dependents um, or more and you have an I-10, it's really going to impact you. Um,
it really
but
is.
the other deduction that comes with OB3 is the senior deduction. So that one, it was a little bit confusing because the Social Security Administration issued a press release that there was no tax on Social Security benefits, which is incorrect. Yes, what actually passed was this $6,000 of a deduction for those adults that are 65 and over. And you don't have to have Social Security income to be allowed this deduction, but you do need a Social Security number.
Right. So this is in lieu of Social Security not being taxable as the president had promised.
Correct. Correct.
So this is, some people aren't, it isn't going to help very much because their standard deduction as a senior citizen
Mhm.
is already pretty high. It's in the 30,000s up there.
Hmm.
And their Social Security, and if their Social Security gets a different plateau in there, yeah, it may not
Mhm.
help very many people at all. And
Yes.
and then, it phases out if you're single, 150,000, 300,000 if you're married, filing joint. Well, I have a lot of taxpayers that make way over that. And so it's going to phase out. It's just, I don't think it's going to help that many people myself.
Honestly, yes. The phase out limits start at
Oh,
75,000
I'm sorry,
for
70.
single. Yeah, I know all these numbers that are coming into each other, but the phase out starts at that amount and it's 6%. So if you have a single senior that makes $100,000, that's 25,000 over the 75,000. You take that over the $25,000, multiply times 6%, and that's how you have to bring down that $6,000. So the phase out is going to happen pretty quick. And like you're saying, it's not as beneficial as it makes it sound.
Thank God for software.
Oh, yes.
I'm telling you, be sitting here all day trying to
Yes.
calculate that out. And another big advantage here, especially here in California and other states like New York, where there's really high property taxes, is the sales and land tax deduction going up to 40,000 for married filing joint, 20,000 for singles. If people are used to doing it yourself, or if they're going to someone who's not up to date, I have a feeling a lot of people are going to miss that deduction and they're not going to get it on their taxes. As well as the charitable contribution, they're moving that to $1,000 for single, 2,000 for married filing joint, I believe it's going to be two adjustments to income, and it's going to be somewhere else. So you don't
Mhm.
have to itemize, but you will be able to get a charitable contribution.
Right. And just to make a note on that, that's starting with 2026 returns
Okay.
filed in 2027.
Mhm.
So now we can't look forward to it too soon on that charitable contribution, but I love that.
Yeah.
Oh yeah, it kind of brings you back that memory, right? Didn't we have that like in 2021 where it was
Mhm.
$300 and
Yeah.
$600? And now
Yeah.
we got a nice increase all the way up to 1,000 and then
Yeah. In
2,000.
2000. Hmm.
Yes.
And what about educator expenses? Those are staying on too, right?
Yes, so it's we've had the normal the little $300. I have teacher clients and they spend more than $300 in their on their classroom supplies. But yes, it's max $300. But what did come back in 2026 though is anything above the $300, they're going to be able to go to Schedule A. So any access, so you really would need to have a teacher that spends more than $300 and that is probably a homeowner or paying real estate taxes, something that they're itemizing in order for them to see the benefit. But yes, at least we know that over $300 will go on Schedule A starting in 2026.
Right.
Yeah, those school
Another,
supplies are no joke, right?
And these teachers, they pour their heart into their classrooms and
Hmm.
they're spending more than the $300.
easily.
Yeah, sorry to interrupt you, Nate.
Oh, no, I was just gonna piggyback off of the Schedule A there. and talk about how going forward, it sounds like we're going to have a little haircut on the charitable contributions. They're going to be limited by 0.5% of AGI, which we haven't had before. So that's something interesting there.
Yes, I imagine that on Schedule A, almost like what we have medical right now, the
Mhm.
computation for medical, that's 7.5%. There's going to be something there for charitable. Yes,
Mhm.
only anything above 0.5 of your AGI is, I'm not sure how they come up with these percentage of 0.5%. Yes.
Right.
The new deduction to the what they call the no tax on car loan interest.
Mhm.
That's, have you had clients contact you, where I had a client contact me and say, "Hey, I'm going to the dealership. Am I going to be able to get a deduction for this?"
No,
And it's like, wait,
absolutely.
we need to talk about this. Yeah, because it's a deduction up to $10,000 of that loan, of the interest that they pay on the loan. But it does have income limitations, and they're pretty low. It's for a single person, it's $100,000. So once they earn more than $100,000, then that $10,000 of a deduction goes down. And I know interest rates are really high right now, for car loans. So yes, they're going to probably be hitting those amounts of $10,000, but the loan does have to have started in the year 2025. So it's not an existing car loan. It's a new loan that starts this year in 2025. And the car that they're purchasing has to have final assembly in the US. And it has to be a new car. So you have to be the first
Mhm.
owner of that car. It can't be a used car. It can't be one with salvage title or lease finance. So there's a lot of caveats that we need to make sure that we meet these requirements. It's not just what you hear on social media that it's a $10,000 deduction. So yes, that's the conversation I had with my client. Let me ask you questions first. Is it a new car? You know,
Yeah.
um, how much is your income? Let's look at your income because you might not even qualify for this deduction.
A question on that one,
Mhm.
totally unrelated but related.
No,
How
yeah.
did how did your client find out about this? Was it through social media, the news? Because everything's on TikTok, and they're like, "Oh, I heard it on TikTok or Instagram, and blah blah blah."
Yeah, majority of my clients, or I don't know, Ned, Mr. Lopez, and Vince, the taxpayers that you see, TikTok said it. And then,
Oh, yeah.
TikTok says to open an LLC and I can write everything off. Just,
Yeah, we're just gonna have to take over TikTok ourselves, and then when they say TikTok said it, as long as it's us, we're okay.
we
Yeah,
need to
'cause-
come up with our own TikToks and
yeah.
have the real truth out there.
Yeah, because that's one of the things that can be stressful. I know Mr. Lopez has heard it throughout his whole career. Well, my neighbor, before it was a neighbor, now it's TikTok.
Yeah.
Still same issue, but different item or a source now. Before I was the neighbor,
Yes.
and we still get some of the like, well, my neighbor or my sister or my brother-in-law. I don't know. And then it's just at times it's just misguided information or misinterpreted information. And that's one of the questions here when we were talking about the W-4. What do you recommend? Should we tell them go single and zero on their W-4? We can't really tell them, right? How would you handle this one, Nadia?
Oh, it depends, right? On everybody's situation. Even if we just talk about this, the ITIN, are you an ITIN holder now? That's something that we need to start looking at. Are you an ITIN holder? Let's look at your income that is planned, what you had last year, what's going on this year. Is it going to look about the same? How many qualifying dependents do you have? So it's not one of those quick answers that we can do. We're going to have to sit down and do an advisory consultation, because if you really just want to do something quick, then do the same as last year, and then just with the caveat that you might owe if your situation is going to be different from last year.
I can foresee uh, that come tax time, I'll probably have a stack of W-4s over here ready to go because now we're going to be in a pinch and they're not going to want a repeat of 2025 and
Mhm.
2026. So as long as they are still qualifying for the other dependent credit as an I-10 child would qualify for another dependent credit. We would just advise them if they wanted to present their children on their tax return and on the W-4 that they would put them in that over 17 or other dependent area. That's I mean, just kind of give them those ideas. And of course, if they want to be really precise, to pull out the table. That's
We
most
yeah,
typically for.
yeah, we really need to spend the time, right, with the consultations, and then these new deductions that, the senior deduction, the overtime, the tips, the no car or the car loan interest, they're temporary. They start in
Yeah.
2025, but the last year is 2028.
Right.
So
They're
let's
only for
keep
3
that in
years.
mind. Yeah.
Yeah. It's all temporary.
And salt too, right? In
Mhm.
Yeah.
2030, it goes back down to what we've been used to, the $10,000 of a limitation.
Right.
Yeah,
Good
many
point.
changes, and we're getting here close to our 30-minute mark. So unless we need to cover something else, or we can open it up to questions that they've been piling up. I think this one's funny. Is like, have you heard the I looked it up on Chat GPT?
That one's
Uh,
Not
coming for
yet,
us.
but yes.
yeah, I haven't heard it myself yet, but
But won't be
uh,
surprised. Yeah.
yeah, Chat GPT's on everything and everybody. But yeah, if you guys are ready, we can answer some of these questions, or if there's something else before we jump into the questions.
Well, just don't believe TikTok.
Talk to your tax professional.
Yeah. Talk to your tax pro first.
And if
Hmm.
you're the tax pro, um, just kidding.
You better get your
You're,
training from
Yeah.
Latino Tax Pro.
I was gonna
Yes.
say too.
Just
Uh,
know your trusted advisors. Know who they
Yes.
are so you can
Mhm.
keep up to date.
Yes.
Yeah, I think one of those are the funniest ones is those memes where it says you're asking ChatGPT something and it says, "Oh, talk to your tax pro, but you are the tax pro." So okay, so we have a lot of these questions here. So I know a lot of and those for those asking, the first part was recorded. We will be sending a follow-up email for everybody that tuned in, and we have their email, especially here on these Zoom Zoom registrants. We're going to be sending up a follow-up email along with this recording and the previous recording, so you guys can check that out. But I think one of these questions was here, the first one. The child tax credit will not be given to taxpayers without a social security number. Will they still qualify, or is the other dependent credit available for them for the 500? Naj, I think you were touching up on
Yeah.
this.
Yeah, to my understanding, we'll still be able to get that ODC, that other dependent credit should be available.
Yeah, and then one of the follow-up ones for the tips. So will it be up to the employer to know the difference? Do we know how that will show up on the W-2s?
Well, the employer is going to report it to their
Mhm.
payroll company. And also, I saw another question in there. Someone asked, is it only cash tips that are qualifying deductible? It's all tips.
Mhm.
It's the paid by credit card, the allocated tips, the cash tips. It's only the mandated tips that aren't included in this.
That's the one like you
Yes.
were talking
Mhm.
about, right, Nadia?
Yes, that required. Do you not have that in your city in California? If you have a large group of that go into a restaurant?
Yes,
Oh, we do.
here's the way it works is they can tell you there's going to be a 6% additional tip, but you can
Uh-huh.
always opt out. You can tell
Oh,
the
okay.
owner, we had a lousy waiter, lousy server, we're not going to pay
Okay.
it.
Oh,
Okay.
So
wow.
we can opt out.
That's not available here either. We have to pay the 20%
Do you
Wow.
also
automatic
get
tip.
charged for
Yep.
large groups? Yeah. Yeah.
Yeah,
And yeah, I think a lot of the response, like you say, Mr. Lopez, the W-2 is going to change, the 1099 is going to change. We don't know how, but the employer is going to have that responsibility. The burden is on them to sort what's a qualified tip, what's a non-qualified tip. So I'm curious how the accounting software is going to start updating or changing.
Wow.
What I've been advising is those clients that do receive, that are tip earners, the Uber drivers, the restaurant workers, on your own, start keeping track of that. Your overtime too, and get more familiar with, are you getting paid overtime? How much is look at your paycheck stub, because I know on the paycheck stub it does kind of
Yeah.
have a line for year-to-date overtime pay. So it's going to be some responsibility on the taxpayer too, just as a double check, because this is so new that let's really check the math for that the employer is telling us that was qualified or not qualified.
You're right. And to follow up, those earners that are receiving tips, they're supposed to keep a tip diary anyway. I
Not
know
not just
the clients walk in and you go, well, let me see your tip diary. Huh?
not just a tip jar, right?
Tip jar. Well, here's my tip jar.
It's empty. Uh, yeah, so with this one, is this a permanent or a temporary law?
It is temporary. 2025 is the first year we get it, and then the last year we get to have this is 2028.
Now here's one that is in same area. They're talking about tips and overtime for um 3 years, and then how would that affect those ITIN holders? Or does
ITIN
it?
holders, yes, they are not allowed that deduction. They are not allowed the tip deduction, the overtime deduction.
Okay, you have to have a social security number,
Yes,
valid social security
yes.
And
Uh,
And
the thing that is still up in the air is the married filing joint couple. So let's say that the tip earner is the Social Security number holder and spouse does not have it. We don't have all of the information there, how that will
number.
work. We're waiting on further guidance. So keep in touch.
mhm. Yes, and when it comes to married filing joint, what about if both of them are tip earners? They are both restaurant workers. And do you get double the deduction? You don't. It's a max of $25,000 on the tax return. So you can't add up both. If you add both of them, it's limited to 25,000 for the tax return.
And
And
I think
isn't
we were
there
talking.
a gross income deduction as well, or limitation on tip?
Yes, $150,000 for single, 300,000 for marriage filing joint. Anything above that, then we have to start reducing the $25,000 of a
And
deduction.
phasing out.
And
Yes, the phase out. Mhm.
it's not allowed for married filing separate either. You must, if you're married, you must file married filing joint in order to get these deductions.
Yes, yes. The one thing that I think is the most urgent, not only like you're saying, as the ITIN holders on let's adjust the withholding, but those credits that get repealed, the energy credits, right? The
Yeah.
September 30th of 2025 is the last day you can buy that EV, that hybrid, that clean vehicle. That's the credit up to $7,500. And so if you finalize the purchase on that Tesla on October 1st, it no longer would
Mhm.
qualify for the credit. The energy improvements, the new windows, the HVAC, even the solar panels, which solar panels are really expensive. And that's a credit up to 30% of all of those expenses, but until December 31st of this year. And I think that's one of the things that we need to be aware of, because in Texas, solar panels are getting pretty popular. But when you place the order for the solar panels, they're not going to come that same day and install them. Usually you get scheduled. In order for you to receive that credit, this solar panel has to be installed and producing energy by December 31st of 2025. So that's something that we need to be cautious about, those dates that are coming up on us.
So important to know those dates.
Absolutely. Here's one that's kind of good. And do you know if salary workers will be getting any tax breaks
Mhm.
or
The
just a regular break at work?
You get
you
your
know
lunch break and
Yeah.
your
yeah.
10-minute break.
Yeah.
Are you shopping for a new vehicle? Are you shopping for a new vehicle? Because you can get an EV and get a car loan interest on it, get that car loan interest deduction, and get the EV credit, the clean
There you
vehicle
go.
credit.
See?
Mhm.
Yeah, so there's many questions here that are still coming up, and some of the questions are we gonna do this in Spanish? And the answer to that is yes, we will. We will be doing it in Spanish. We're gonna be announcing the dates here as we gather up and redefine a lot of this information. But we will announce it. So for whoever wants to have it in Spanish, make sure you're signed up to our newsletters and so you can get those dates and the link to register or follow us on any of our social media platforms. Um, Now there was so many questions coming in. Um,
Well, here's a good one for Naj. Do both parents need to have social security numbers to claim the CTC, or can it be mixed SSN and I-10?
Absolutely. So, no, both parents do not have to have valid social security numbers. With one parent having the valid social security number in a married filing joint situation, they will still be able to claim the child tax credit and additional child tax credit if that applies. Mhm.
Great, thank you.
Absolutely.
and a follow-up to that one, Naj, um, does the person or the parent that has a valid social security number, do they have to be primary or can it be an ITIN? Does it matter?
That part does not matter. No, no. If you've had a um what what was the credit a couple of years ago that needed to have one parent? It was the recovery rebate.
Oh,
Recovery
that's right.
rebate back the 2021 one that was 1400. As long as you had one parent with a valid social security number, then they were able to claim that recovery rebate credit. So I feel like it's going to be exactly the same in this instance, and primary or spouse will be fine.
Mhm.
Yeah, and then one last question because we are at the hour mark. To finish up, is the SALT credit going up to 20,000?
For
Up to
single people,
40. Yeah. Sorry, go ahead.
yeah, I'm sorry, yeah. And married filing joint is 40,000.
Mhm.
So yes, awesome. And then I think this is more of a, will you guys have a live event to talk about this once once everything is finalized? I'm assuming an update update class, but
We'll have update classes, yes, and we'll announce those.
yeah,
Some will be webinar style like this, and some will be live.
live in person. Yes.
Mhm.
So stay tuned. We will definitely keep everybody posted. Um, Anything else? And I know there's many questions that are still coming in, and we can only get to so many within the time frame that we have. But thank you everybody who participated. And anything else that we that you guys want to leave the clients or the audience with? We'll start with you, Nash, and then go that way.
Oh, sure. I think it's really important for us as tax preparers to stay informed and to try our best to communicate these pressing matters to our clients. And if social media is the way that they're watching, then that's what we have to do. If we're not social media savvy or we're not out there wanting to put our face out, let's share posts, share Nadia's posts, share Latino Tax Pro posts that give the information to our clients so it's right in front of their face. Just uh, spreading that awareness is going to be our biggest priority right now. Nadia?
Yes, and I think, it does seem overwhelming because there are some changes that are impactful. But I think as tax pro community, let's stick together. Right, because there's so many changes out there. There's guidance that's coming out slowly and clearance that's coming out slowly. And sessions like this is where we can hold each other accountable and hold each other with the knowledge sharing. And I think that's what we need to stick together with. Share that knowledge, share each other's posts, repost other social media posts that you do come across, and spread the awareness.
Absolutely.
Awesome. Thank you, Nadia. Mr. Lopez.
Yeah, so I want to reemphasize, where do you get your information? You know, get your information from credible sources. You know, don't get them from your neighbor. Don't get them from the guy that has a bodega down the street and then also has a, carniceria and has a taqueria in there. Oh, and he does taxes on the side. That most likely is not going to get you the top information. We're here to provide you with the truth and what's going to help you the most. I mean, what's your long-term plan for being here in the United States? Your long-term plan is to prosper, to have a great life for you and your children and your grandchildren. So be sure and get your information from credible sources and tune in to Latino Tax Pro. We're going to be giving these as long as we can, as long as we have Naj and Nadia helping us. Otherwise, it'll just be me and Vince. No, I'm kidding. But thank you very much, everyone, for attending. I know some of you have spent your time with us, and I hope you get a lot out of this. And keep an eye on social media, our emails, and we're going to start texting here pretty soon so that you can make sure that you attend all these.
Yeah, absolutely. And Nadia and Ayush, thank you as well for spreading the word, especially within the community and those that still haven't heard it. Um, I believe you have something going on too, right? A community.
Oh, yes, yes. I have an inner circle community. It's on my Instagram bio where you can join my inner circle community. And it really is this, us coming together as tax pros. Sometimes it's venting sessions and that's okay. And we come together to just what are we hearing out? What are our clients coming to questions with us? And so we help each other out, we hold each other accountable.
Awesome. Well, and that concludes today our panel discussion. As Mr. Lopez, Nadia, and Nish have mentioned, get informed, stay up to date. We're going to be having the most up-to-date information as we humanly and possibly can. And until it's concrete by the IRS, as of right now, this is what we have. This is the information we're going to be sharing. Stay tuned in, and we'll see you in the next panel discussion. Thank you, everybody. Thank you, Nadia and Mr. Lopez. Have a good one.
Thank you.
Thank
See
you,
you guys
everybody.
Thank you
soon.
for having me.